dual aspect. Dual aspect. This is the fundamental double entry concept. Every transaction has two sides. Basically, it says assets are equal to liability. In accounting, assets will always be equal to liability. Liability may be of two types, may be liability to owner and liability to third party, to some outsider. Liability to the owner is often called equity. It's called equity. That is the owner's share. So sometimes the equation may be written as assets equal to liability plus equity. Or equity, what is equity? What belongs to the owner? What belongs to the owner? Asset minus liability. That is the worth of the business. That is what belongs to the owner. So the fundamental accounting equation is that assets are equal to, equity is equal to assets minus liability, or assets equal to liability plus equity. So this is a fundamental accounting equation on the basis of which the entire double entry system is based. We can consider a couple of examples to see whether assets are always equal to liabilities. Let us say X starts a business with 10 lakh rupees. He opens a bank account, deposits 7,50,000, buys furniture for 2 lakh, issues a check. He arranges for fittings in his shop for 50,000. Let us take each of these transactions. We shall put assets on one side. Should be equal to, I am putting liabilities and equity. So assets are equal to liabilities plus equity. First thing is that X starts a business with 10 lakhs. Remember, the entity concept says that X is a separate person, the business is a separate person. So X brings money. X brings money. It is actually called capital in the books. So what happens? There will be a cash of 10 lakhs. So this is cash, 10 lakhs. And capital of 10 lakhs. And capital of 10 lakhs. So if you notice, cash 10 lakhs, capital 10 lakhs. So now we have asset of 10 lakh being cash, and we have liability or rather equity of 10 lakh being capital. Next, he opens a bank account, deposits 7,50,000 in the bank. So now what happens? His cash has come down, minus 2,50,000, minus 7,50,000, but 7,50,000 is given to the bank. Bank money in the bank is also his asset. If tomorrow he wants to take this money, he can take it back. The bank has to give it to him. Therefore, 7,50,000 is an asset. So what happens is, deposits, when he deposits cash, deposits in bank, 10 lakh, plus 7,50,000 minus 7,50,000, because cash comes down by 7,50,000 and cash at bank goes up by 7,50,000. So plus bank minus cash 7,50,000, the equation stands. Next, he buys furniture for 2 lakh and issues a check. He buys furniture. So when furniture comes in, what happens? Furniture plus 2 lakh . issues a check. So money goes out from the bank. Again, asset comes down, bank asset comes down, furniture asset goes up by 2 lakh, net effect nil. So we still have 10 lakh of asset and 10 lakh of equity, but the nature of the assets has changed. He arranges for fittings in his shop 50,000. Arranges for fittings in his shop for 50,000. Let us assume this arranging of 50,000 is on credit. He has not yet paid the person. In that case, what happens? He has a fittings, another asset of 50,000 and a liability of 50,000. At the end of this, if we take an equation, what we have is asset of 10 lakh 50,000. How do we have 10 lakh 50,000? We started with cash of 10 lakh, but 7 lakh 50,000 was paid into the bank. So we have a cash of only 2 lakh 50,000 consisting of cash 2 lakh 50,000 consisting of balance in bank 7 lakh 50 minus the 2 lakh of 5 lakh 50 plus furniture of 2 lakh. This is our asset. Cash 2 lakh 50, cash 2 lakh 50, bank 5 lakh 50, furniture 2 lakh. Then we have on the liability side, this should be equal to liability side 50,000. What is this? Creditor for fittings. Because you've not yet paid this person who has provided fittings, and 10 lakh capital, equity capital. Thus, every transaction had a dual aspect. If an asset goes up, a liability also goes up. Or an asset goes up and the liability comes down. Asset goes up, equity goes up. Asset goes up, liability goes up. Thus, double entry is satisfied. Let us consider one more example. Buy goods from Y on credit 2 lakh. Sell all the goods for 2 lakh 50,000 and deposits the check into the bank. Now he buys goods on credit for 2 lakh. So what happens is there is an asset for 2 lakh. And this side there is a liability because he has not paid the creditor. It's on credit. It's 2 lakh. Buy goods from Y. This is actually Y's account. This is goods account for 2 lakh. Then he sells all the goods for 2 lakh 50,000 and deposits the check into the bank. Therefore, this goods worth 2 lakh goes out and money comes in for 2 lakh 50,000. But now there is a difference of 50,000. What is this difference of 50,000? This difference of 50,000 is nothing but the profit made by the business, because the business bought goods for 2 lakh and it sold for 2 lakh 50,000. Profit of the business belongs to whom? The profit of the business belongs to the proprietor, equity. So when profit is made, it is transferred to the proprietor's account. So as a result of these transactions, we have now a bank balance asset of 2 lakh 50,000. We have a liability to a creditor for 2 lakh and capital, liability to the owner, which is capital or equity of 50,000. Again, the double entry dual aspect is satisfied. So sometimes this equation is written as assets equal to liability plus capital plus income minus expense. So if there is an income, it is added to capital. If there is an expense, it is deducted from capital. When we go on to understand accounting entries, this is the basic foundation on which all the accounting entries would be framed. So every transaction has a dual side. The basic equation is that asset is equal to liability plus equity, or equity is nothing. What belongs to the owner, it is nothing but assets minus liabilities.